Welcome back. I'm Pratap here. Today is 11th December 2023. If you are accessing our channel first time, please understand we are providing a free training on supply demand zone price action theory. So you can visit our YouTube channel homepage. You can click on this home and then scroll down to the playlist supply demand zone price action course. So please click on this playlist. You will be able to access all the training videos on supply demand zone price action theory, starting from lesson 1 until the most recent lesson. All the upcoming lessons also will be available under this playlist. I have also provided a link to this playlist in this YouTube video description. So by clicking on that link, you can directly get into this playlist. So this is for your information. So let us get into our analysis discussion. So before we generate demand and supply zones for today's data, let us analyze the high liquidity zones identified in our previous video. Even before that, still Nifty is moving in a narrow price range. That means it is forming a base. So far there are 4 base candles as part of the base. So we should wait until a leg out formation completes. We don't know, the leg out could be a rally candle or it could be a drop candle, but we have to wait and see. Okay, let us analyze the stocks from our previous report. We have identified 3 high liquidity zones. The first one is ICICI Prudential. We have identified it on daily time frame. And the stop prices are yet to enter into this daily demand zone. It is a fresh zone. So what is the rule? We need to identify a 75-minute zone inside this daily high liquidity zone. Always high liquidity zone should be used as a HTF zones. That's why the daily zone is a HTF zone. So one time frame below that is 75 minutes. So you need to find a fresh zone inside this zone. So we have identified a fresh zone, a drop, base and a rally candle. Okay, in order to take the trade, what we need to do? We need to fine tune this 75-minute zone at 15 minutes level, or if the risk is high, further you can fine tune to 5 minutes level. So for that, what I did, I went to the 15 minutes time frame. In the 15 minutes time frame, the structure is not very clear. We have a lot of consolidation here, and then we have some rally candle and a base candle. Again, we have a rally candle with gap. We have a hidden body here. Even then, the risk is high. So for that, what I did, I went to the 5 minutes time frame. Now you will get a complete clarity about this zone. Look into this 5-minute zone. We have a drop, and then we have 1, 2, 3, 4, 5, 6, and then again we have a drop. After that again we have a rally. Between this drop candle and rally candle, there are no base candles. That means the structure of this zone is not clear, very clear. That way, we can identify this zone will be broken very easily. So it is not advisable to take a trade in ICICI Prudential. There are higher chances of breaking this zone. That means this zone will be violated unless institutions decide to create one more demand zone, one more fresh demand zone inside this, and again push the prices up. If that is the case, next time again when prices retrace back, at the time we can take a trade. Otherwise, so far as per this recent data, it is not advisable to take a trade in this zone because the structure of the zone is not good. Okay, the next stock, anyway, the prices did not enter into this. And the next stock is Aarti Industries. This is a 75 minutes zone, a supply zone. So let me get into the 75 minutes time frame. So here we have a drop, base and drop. This is the 75-minute zone. So because the risk is very high, what we do? Mostly we use 75-minute zones as a HTF zones, higher time frame zone. So we go one step below, that is 15 minutes. If the risk is minimal, you can take an entry. Otherwise, you have to further fine tune to 5 minutes level. So here we have sorry, this is today's data. Let me go to the previously. See here we have a rally candle, two base candles, and again we have a drop candle. That means we can draw a 15-minute zone, something like this. Because the risk is high. So what is the next step we have to do to minimize the risk? We have to get into, sorry, this is a 5 minutes time frame. I'm sorry. See here we have a 15 minutes time frame. You can consider this candle as a leg candle, that is a medium, or still if you consider this is a base candle due to less percentage of the body. The previous one also we can consider. Maybe this is, see, this entire thing is a failed ERC candle. If that is the case, you can draw a zone something like this, 15-minute zone. Or if you consider this is a leg candle, this is considerable enough. Look into the range, don't look into the body. If you feel this range is enough to consider this is a leg candle, still you can draw a 15-minute zone like this. Or even if you consider this as a considerable leg-in candle, still you can draw a zone like this. That means somewhere here you will be able to draw the zone like this. Or even you can consider this entire thing is a leg candle. It is a clear now. So we have this complete area is a base and then a drop. That way also we can consider. But what matters here, your experience. Based on your experience, you will be in a position to fine tune at the best level. If you ask me how I draw this zone, I can draw this zone like this. This is the way I draw 15-minute zone. But still, the risk is high. What we do in this area, we will try to fine tune at 5 minutes level. And many people may not convince with this structure. See, the problem with visual representation is when you have a very large candle, huge candle, the previous candles will be automatically changed to a small candles. This is the problem with the visual representation in the charting software. Not only this software, in any charting software. See how at present this candle is not looking like a leg out candle. It is looking like a base candle. But the moment I hide this next candle, see how the shape is changed now. The moment you look into this candle, you will accept, yes, this is a leg out candle. That's why right from the beginning always I am saying, there is always a problem with visual representation. But software programs won't be having such kind of issues. Okay, anyway, when you don't have a clarity, you just draw the zone and then go to the next time frame, that is 5 minutes. Now inside the 5 minutes time frame, you will be in a position to identify a zone in a better way. See, now we have a rally candle, two base candles and a drop candle. Now I can draw my 5 minute zone something like this. And for type 2 entry, we can draw a zone like this. We can fine tune. See, we have a rally candle, we have two base candles, and then we have a drop candle. And everything came inside the 15-minute zone. This 5-minute zone is inside the 15-minute zone. That is the way we have fine tuned. That means this is the best zone to get to take a trade. Why we have taken type 2 entry? To minimize the risk. See, what is our goal? Always to minimize the risk. See, today we got the entry. At what time we got the entry? At 10 o'clock, 5 minutes we got the entry. And this is the 15-minute zone. Because most of the times our targets are at the 15 minutes. Even though we take intraday trades, but most of our high liquidity zones are giving 15 minutes targets. So let me go to the 15 minutes. So we have a drop, 3 base candles. Sorry, we have a rally, 3 base candles, again a rally, rally base rally. This is the demand zone. This demand zone is our immediately available 15 minutes demand zone for our entry. So this is going to be our target. So prices reached at 10 o'clock. And again prices reached to this 15-minute zone at 10:30 candle. So almost within an half an hour it reached the target. Okay, what is the value here? 4,350 rupees for one future slot. The profit is 4,350 for one future slot. And what is the ROI? Return on the investment. ROI always we calculate based on the margin amount of one future slot. So the ROI is 3.79%, which is less than our average intraday return for high liquidity zones. Because most of the times our average return is above 6.1%, or we can say above 6% approximately. So this value we got 3.79 because sometimes we have to accept because the 15-minute zone is close to our entry zone. But what happened today? We got one more entry during the intraday. Let me delete this for time being. See, we got one more entry. What is the target is supposed to be again? Again 15-minute zone. But here there is some different price action we are able to see here. Prices are not able to reach up to this 15 minutes area. Why it is not able to reach? Because there are a lot of rejections in this area. While there are a lot of rejections in this area, that means there could be a lower time frame zone that is not letting the prices to go down. I always say markets are dynamic. Because markets are dynamic, sometimes you need to adjust your targets. How I know I have to adjust? Because see, most of the rejections from this area, that means there could be a high liquidity, a new high liquidity demand zone at 5 minutes time frame. There could be a new high liquidity demand zone at 5 minutes time frame. That's why a lot of rejections are coming. That is the way your mind should tell immediately. So if there is a high liquidity 5 minutes demand zone, then it never let the prices to reach into your 15 minutes demand zone. If that is the case, you have to adjust your target. So look into the 5 minutes. Here a new zone is created. See here our target is, we got our entry. This is our first entry. It reached the target, and after reaching the target, a drop base rally is created on the 5 minutes time frame. Most of the time what happens, these 5 minutes zones will be violated very soon. Because we are at a high liquidity supply zone, high liquidity supply is very powerful. Most of the times what happens, these 5 minute zones will be broken easily. Maybe one test will be there, second test easily the zone will be broken, most of the times. But today it didn't happen. Why it didn't happen? Maybe institutions created more demand and they decided to violate the supply zone. Maybe that could be a reason. But anyway, we got the second entry, and the second entry reached this 5 minutes target. Generally what we think, this zone will be broken easily. We will be waiting for that, so that it will reach our target after violating this 5 minute zone. See, already one entry, first entry is here, and again a second entry here, again a third entry here, again a fourth entry in the next candle in this 5 minute zone. That means tested. First time it is tested here. This is the second test. This is the third test. Next candle is the fourth test. By the time when there is a second test, and from the second test there is a rejection, immediately you have to realize there is something is happening in this demand zone. Maybe this is going to be a new high liquidity 5 minute zone. If this is the new 5 minutes high liquidity zone, then it never let prices go below this zone. That means our 15 minutes target won't be achieved. So what we have to do? Immediately you have to adjust your target to this 5 minutes. So probably in this candle, or if you missed, probably in this next candle, you might have exited. That means you might have booked your profit. Now profit margin is reduced. Yes, we have to accept that. That's why always you have to observe. You should not fix your target, and you should not think that the prices always reach our target. But you should not forget, markets are dynamic. Sometimes markets will be changing. When markets are changing in a dynamic way, you should also change your targets. See here, we got the entry, and there is a demand zone, but you might be thinking this demand zone will be violated, but it is tested here just before, maybe a 5 paisa, 10 paisa difference. There is a rejection. Now itself you should realize there is something is happening in this demand zone. Because there is a rejection, the demand is very strong. Institutions created this demand zone as a new demand zone. Now again prices came. Now again there is a rejection from this zone. Now you have to alert immediately. Now prices again reached here. Now immediately you have to book your profit in this scenario. So probably by 12:50 you would have booked your profit. If you missed, probably the next candle you have to book. See, most of the day the prices moved here, and finally what happened? This demand is very strong. It pushed up, and now this zone is violated. Why it is violated? Because it is already tested 2 times during the intraday. Most of the times intraday we will accept the second test. And third and fourth is doubtful because the zone is not a high liquidity zone. So now it is violated. So this is the way you have to analyze your chart for changing your target when markets are dynamic. Okay, now this is now the second test. This stock has given 3,200 rupees profit, which is 2.78% return on the investment. And both the trades together, now we got a profit around 6.5%. Both the profits together, even though in a single trade we did not get 6.1 ROI, but both the trades together it achieved the 6 point, I mean, the ROI is above 6.1%. So this is about Aarti Industries. We got two successful trades today. And the next one is State Bank of India. Even it gave two excellent trades. So this is also a 75-minute supply zone. This is the 75-minute zone. We have a rally candle, base candles, and a drop candle. It is already tested. Okay, even if it is already tested, we don't bother because it is a high liquidity zone. What is required for us? We need a fresh 15-minute zone inside this. If fresh 15 minutes is there, then definitely we can believe this zone is going to work again. It is going to give one more entry. So for that, what I did, I went to the 15 minutes time frame. In the 15 minutes time frame, I identified we have a ERC candle. We can use this as a leg in. And then I identified three base candles like this. And then we have a drop candle. We have a leg in, three base candles, and a drop candle. And this is a fresh zone, fresh 50-minute zone. But what is the risk is high? Because the risk is high, I again went to the 5 minutes time frame and I have fine-tuned that 15-minute zone to minimize the risk. How I have fine-tuned? Let us look into the zone. See, always you have to fine tune inside the 15-minute zone. You should not forget that. So this is the 15-minute zone. Inside this 15-minute zone, I have identified a rally candle, two base candles, and then a drop candle. A rally, two base candles, and a drop candle. This is the 5-minute zone. And the risk is minimized at the least level. Now let us get into today's price action. Okay, today before the prices started, this was the situation. Yeah. Let me go to the 15 minutes time frame because we are looking for target on the 15 minutes. This is Friday's last candle, 15:15. So when I prepared a plan, my trade plan, so I have seen a rally candle and a base candles, two base candles, and again a rally candle. So I have seen a 15 minutes demand zone. So this could be my expected target from the supply zone to this demand zone. But I have also sensed there is a possibility that See, this is Friday's data. There is a rally candle and also there is a base candle. This is as per Friday's data. What could happen? Today, again a rally candle might be created in the morning hour. That possibility is there. If that is the case, my target is not this target. Whichever the most recent demand zone is created, that is going to be my target. If that is the case, what I have to do? If that is the case, I have to change my target to the newly created demand zone. So by keeping that point, I prepared my trade plan. See next what happened today? An ERC candle is created. We have a rally, we have a base, and then we have a ERC candle. So at some point of time, this entire candle is a green candle, that is a full rally candle by the time when prices reached into this. That means it is looking like a rally, base and rally. And this candle we got the entry. After got the entry, again what happened? The prices again came down, came down. Why it came down? Because this because this is a high liquidity zone. The actual institutional pending orders are there because this is the origin. Mostly the pending orders will be there at the origin. You will be able to identify at 15 minutes level or 5 minutes level. See the entire move. Again, how it pushed the prices down. Now we all get a doubt. Is it really a demand zone? Because we have a failed ERC candle. Earlier I remember 2 or 3 times I have explained when you have failed ERC candle, we can draw a demand zone, but that demand zone we should not consider for taking the entry. But you can consider the demand zone for identifying your targets. So that is the way I have identified a new target instead of the demand zone below this, the new demand zone which is based on the failed ERC candle. Because sometimes there could be huge pending orders in this area. That is also possible. Okay, anyway, here we got an entry and after that again prices came down and entered into this 15 minutes demand zone and again the zone is violated. Maybe institutions might have added a new orders or maybe there at lower time frames there could be some zones, anything might have happened. Again see how there is a big rejection. That means this is the area, the wick area, in this candle the wick area. Again we can expect a demand again here. What kind of demand? Newly created demand. But anyway, it reached our target. So here we exited. So this is the entry and this is the exit. And this entire value of the trade is 7,125 rupees, which is 4.3% ROI per one future slot, because all these calculations are based on margin amount of one future slot. So the profit 7,125 is for one future slot and ROI, return on the investment, is 4.3%. Okay, after that, again what happened? Again prices went up. Again it gave one more entry, the second entry. See, most of the time, what we do? We take the second entry a little above this, the previously from where the rejection has come. Our second option is, if this is the type 1 entry, you can again make it a deep entry by adjusting to type 2. But anyway, we are considering as per this type 1 entry because the risk is already minimized at the least. This is at the least level the risk. So we got the second entry. Again within half an hour, it reached the target. See the first entry also. We got around the morning 9:16 got the first entry. Around 9:30 it reached the target. Exactly the same way. We got a 10:30 candle, 15 minutes candle, we got the entry, and 10:45, 15 minutes candle, it reached the target. And what is the again second profit? Because we didn't change, we didn't make any changes in this target. The second time also the target is, I mean the profit is same 7,125 rupees, which is 4.3% ROI. So this is the way State Bank of India has given. After that, the prices were struck up here, and the rest of the day prices moved here only. See how this, even though the zone is pierced, still it is holding the prices. That means institutions are added some new orders in, placed some new orders in this zone. After zone violation, within this area, they might have placed some new orders. That way it is holding the prices. So there is a lot of consolidation happened today. And the prices again went more deep inside. If tomorrow prices again enters into this area, you should not take. Remember, always we have to look for a fresh zone. Within the same intraday, second opportunities we can accept, we can take. But next day again, the volatility is different, it is a fresh market. You are not supposed to take an entry in already the tested zone. We can accept an entry only if the zone is a high liquidity zone. Suppose if this 5-minute zone is a high liquidity zone, then you can take a third entry or fourth entry or fifth entry. Do you remember the Pidilite Industries? The last Friday, the zone is failed, the high liquidity zone. But below that we identified a 5-minute zone. Already it was tested 3 times earlier, and we took the fourth entry. And even today it gave one more entry. Let me show you. It is not there in our list. I think Pidilite Industries is 15-minute zone, not 5-minute zone. 15-minute zone. See, today it gave an entry at 9:15 minutes candle, it came, and again in the next candle, it reached the target. Next time it is easily failed. The reason is, see here in this candle, today's morning 9:15 candle, it took most of the existing demand in this zone. It consumed majority of almost all the orders. So the next time easily it is broken. See the wick of this candle, almost it reached very close to the distal line of this 5 minutes demand zone. So it has given another 5,000 rupees profit. I think last Friday also this zone is given around 5,000 rupees profit. Okay, this is about State Bank of India, and the other one is Zendal Steel. We've been monitoring because it is having both high liquidity demand zone and supply zone. Even this Zendal Steel also given one more entry today. Even though the zone is failed, not the entire high liquidity zone, but the 75-minute zone we fine tuned inside. See, this is high liquidity demand zone, and this demand zone is there since the year 2010. This is created in the year 2000, August 2010. And inside that we have again one more daily high liquidity zone. This is LOTL zone, level on the top of the level. Even this LOTL is also created in October 2010. That means this zone is existing from the year for the last 13 years. So there we have fine tuned. In the recent price action has given some fresh 75-minute zone. This is the first 75-minute zone created recently inside this. Because the daily high liquidity zone, always fresh 75-minute zones will be created. That is the rule. Most of the times it happens inside the high liquidity zones. So in that we have identified one 5 minutes zone. This is a TCO underscore SZ is a low probability high liquidity zone. Among the high liquidity zones, this is having probability very low, maybe one or two tests maximum we can expect, not beyond that. Sometimes it also will fail if the zone structure is not good. But previously it has given one test, this zone. Just before entering there is a rejection. This itself is an indication there is an order is there, some pending orders are there inside this zone. That way we got the profit today. This entire candle looks like both these 75 minute zones are violated inside this. But even though they are violated, one of these zones has given the profit. The other zone we didn't take entry because the risk is very high. Let me show you in the 15 minutes and 5 minutes you will get clarity. First let us go to 15 minutes time frame. So inside this 75 minute zone, we have a rally, base and a drop. This one again we fine tune to 5 minutes level. So we have a drop, 3 base candles and a drop. So it's an excellent zone. And today prices entered into this zone. Previously we have seen a rejection. See how prices were down from this. This itself is a price action clue. Most of the times just before the zone, if there is a rejection and a huge fall, next time when prices enters, definitely it will give at least one successful trade. That is what happened today. See, today price just entered into this zone. At what time it is entered? At 10 o'clock 5 minutes. This is the 5 minutes candle and this is the 15 minutes target. Let me show you in the 15 minutes time frame. So we have a rally candle, we have a base candle, again we have a rally candle, after that the follow through candle, and this follow through candle went up to this 5 minute zone. See the order flow in the 5 minutes, how what kind of rejection it has given. At some point of time this candle will looks like a rally candle. This rally candle, the moment it entered inside, the pending orders pushed the price down and gave a rejection, and in the next candle reached the target. And that way this one has given, Zendal Steel has given 9,375 rupees profit, which is 4.6% return on the which is 4.6% return on the investment. Excellent. Okay, it is already tested. Next time it is easily broken. You may ask a question, why can't we take again? Because most of the time during the intraday we may get a second trade. Why can't we take a second trade here? We can take a second trade if this would not have happened previously. Previously, this candle came very close to this. That means it might have consumed some of the orders here. And today again, it consumed some more orders. That's why it's better to not to take second trade. But that is not the case with the State Bank of India and RT Industries. Even if anybody would have taken a second trade, your loss would have been a very minimal loss. Okay. But why this zone is broken? The reason is very simple. Institutions, see how they created the demands. They created a rally and they created 4 base candles and then with a huge leg out candle. This is a very big leg out candle, explosive leg out. This entire zone is broken and went to the top 75 minutes demand zone. And this 75 minutes demand zone we cannot take trade. The reason is this demand zone is created in the year 2010 and TradingView is not providing data for 5 minutes and 15 minutes or even 25 minutes time frame for fine tuning inside this 75 minutes. Because TradingView data is available for 5 minutes only for the last 1 year data only, 1 year or 1.5 year. And 15 minutes data is available only for the last 2 years or 2.5 years. But this zone is there from the year 2010. Because the data is not available, we can't see the structure of this zone. When you don't have clarity about what kind of zone it is, what is the structure inside, we can't take a risk, right? So better to leave the trade. In case if institutions again create a new zone inside and push the price down, next time again when prices will go up, at the time we can take a trade. So that's why if tomorrow if prices enter into this, better avoid this zone. If you are other than TradingView, if you are using any other software, and if your software is having that 5 minutes and 15 minutes data starting from the year 2010, then you can analyze and you can take a decision. So currently I am not in a position to take a decision. Okay, why this second, the middle one, the middle 75 minute zone is broken? What is the reason? Let me show you. There is a 15-minute zone is there. We have a rally candle, a medium size candle we can use as a leg-in, and we have a base candle, and then we have a drop candle. But how do you draw? The higher wick of the leg candle, base candle or leg out candle, whichever is having, till that place you have to draw a distal line. So if I draw my zone, 15-minute zone, it will be like this. See, the risk is very high. Even if you go to type 2, still risk is high. Even if you go to type 3, still risk is high. And go to 5 minutes. 5 minutes also the case is same. No, most of the times in the morning, the first candle, such kind of things will happen. But this candle is 15 hours candle. Okay, it's not an issue. Here also it is the same. 5 minutes also. See, we have a leg-in candle, 2 base candles, and third candle also a leg candle. But this leg candle is a medium size, and if base candles are there before that, you can consider that candle as part of the base. Only issue will come, this is also an explosive candle, that is a large leg candle, then you cannot consider this is part of the base. Medium size leg candles you can consider as part of the base, provide before this medium size leg candle if there are some base candles. Then you can consider. I think I have been telling this point several times because if anybody missed in our earlier lessons, hope you will remember. That's why some of the important points I am repeating again and again. See, is there any change in the risk? No, there is no change in the risk. And our risk management is not permitting to trade in this zone because the risk is high. That's why we avoided this zone. That way our trade is not stopped out. So we got only one trade is a successful trade. Because of the risk management, we avoided the second 75-minute zone, but it is violated. and the last 75-minute zone we are not in a position to. In case if this zone is violated, most probably this entire supply zone, high liquidity supply zone will be violated. If institutions create a new 75-minute zone inside this, probably we get new opportunities again next time when prices enter inside. So at time being, now we don't have any more opportunities in Jindal Steel supply zone. For time being, no opportunities. We have to wait and see. So these are all the trades from our previous report. Now let us generate a demand and supply zones for as per today's data. So entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So these 6 stocks are near to the daily demand zone. So are there any high liquidity zones? We have Hindustan Petroleum. But remember, C underscore DZ on daily time frame is having less priority compared to the S underscore DZ. So that's why analyze this C underscore DZ properly and see the structure, the price structure inside this zone at lower time frames. If everything is proper, then you can accept the trade. And any more? No more. We have only one high liquidity zone and it is at the equilibrium. And the trend is also uptrend in all the time frames. Even your odd enhancer score is also good. It is 11 out of 15. And the risk is there. Its reward risk RR is very poor on the daily time frame, but we don't bother about the RR on the daily time frame. The reason is we will always fine tune time frames below the daily, that is 75, inside 75, 15 minutes. Inside 15 again we look for 5 minutes. This is the way we do our risk management. Okay, let's go back. Entry time frame is daily. Let us find the stocks near daily supply zone. So we have identified 8 stocks. So any high liquidity zones inside? Yeah, we have Laris Lab, but it is already pierced 3 times. So we never analyze pierced zones as per our high liquidity strategy. We have one more Ramco cement. It is already tested 3 times. Previously also we got opportunities in this zone. But now when you are looking into this zone, look for a fresh 75-minute zone. Or you have to look for a deep entry inside. But it is not yet pierced. Ramco cement and what else? We have one more Tata Steel. Tata Steel is also tested 4 times. But Tata Steel is having both high liquidity supply zone and high liquidity demand zone. Interesting. Already gave 4 tests and 8 rejections. And 1 demand zone, 1 test and 2 rejections. That means lower time frames, that is at 75 minutes or 15 minutes, it might have given multiple opportunities, trading opportunities. I remember previously also we got 1 or 2 trades in Tata Steel. But remember, you have to look for a fresh 75-minute zone based on that only, because this is a daily time frame. So let's go back. Entry time frame is daily. Let us find the stocks where price closed inside daily demand zone. So this is the filtered list. So total 18 stocks are filtered where price closed inside daily demand zone. Let's go back. Entry time frame is daily. let us find the stocks where price closed inside daily supply zone. This is the filtered list. So total 40 stocks are filtered where price closed inside daily supply zone. So let's go back. Entry time frame is daily. Let us find the tested daily demand zones. So these 7 demand zones are tested today. So let's go back. Entry time frame is daily. Let us find the tested daily supply zones. So 2 supply zones are tested. Let's go back. Entry time frame is daily. Let us find the stocks having newly created daily demand zones. So these 12 stocks are having newly created daily demand zones. Let's go back. Entry time frame is daily. Let us find the stocks having newly created supply zones. So these 3 stocks are having newly created daily supply zones. So this is the filtered list for the daily time frame. Now let us generate demand and supply zones and for daily time frame for without any filters for your reference purpose. And daily time frame generating demand and supply zones for all the stocks. I keep on scrolling this list, whichever the stock you want to refer, there you please pause the video. So this is the complete list of all the stocks on the daily time frame. Now let us generate stocks near demand and supply zones for all the time frames. Now let us generate demand and supply zones, stocks near demand and supply zones for the yearly time frame. Entry time frame is yearly. Let us find the stocks near yearly demand zone. No stocks are there. For yearly time frame, let us find the stocks near yearly supply zone. There are no stocks. Now let us generate for half yearly time frame. Entry time frame is half yearly. Let us find the stocks near half yearly demand zone. So this one stock is near half yearly demand zone. Let's go back. Entry time frame is half yearly. Let us find the stock near to the half yearly supply zone. So this stock is near half yearly supply zone. So let's go back. Now let us generate for quarterly time frame. Entry time frame is quarterly. Let us find the stocks near quarterly demand zone. So these 2 stocks are near quarterly demand zone. Let's go back. Entry time frame is quarterly. Let us find the stocks near quarterly supply zone. And this one stock is near quarterly supply zone. Let's go back. Now let us generate for monthly time frame. Entry time frame is monthly. Let us find the stocks near monthly demand zone. So these 2 stocks are near monthly demand zone. Let's go back. Entry time frame is monthly. Let us find the stocks near monthly supply zone. So these 4 stocks are filtered, which are near to the monthly supply zone. Let's go back. Now let us generate for weekly time frame. Entry time frame is weekly. Let us find the stocks near weekly demand zone. So these two stocks are near weekly demand zone. Let's go back. Entry time frame is weekly. Let us find the stocks near weekly supply zone. These four stocks are near weekly supply zone. Let's go back. Daily we have already generated. Now let us generate for 125 minutes time frame. So entry time frame is 125 minutes. Let us find the stocks near 125 minutes demand zone. So these 7 stocks are filtered, which are near to the 125 minutes demand zone. Let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes supply zone. So these 4 stocks are near 125 minutes supply zone. So let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. The total 10 stocks are filtered. Have any high liquidity demand zones? So we have Bajaj Finserv, which is already tested 3 times. We have Britannia, it is also tested 3 times. So we have identified 2 stocks at 75 minutes demand zone. So let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. So 7 stocks are filtered. The high liquidity supply zones. Coal India is already pierced, so we will not look into this stock. Even Tata Steel is also pierced 4 times. This 75 minute supply zone. Okay, let's go back. Now let us generate for 15 minutes time, 25 minutes time frame. Entry time frame is 25 minutes. Let us find the stocks near 25 minutes demand zone. So these 3 stocks are filtered. Let's go back. Entry time frame is 25 minutes. Let us find the stocks near 25 minutes supply zone. So these 7 stocks are filtered. Let's go back. Now let us generate for 15 minutes time frame. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes demand zone. So these 4 stocks are filtered. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes supply zone. So these 10 stocks are filtered. Let's go back. Now let us generate for 5 minutes time frame. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes demand zone. So these 4 stocks are filtered. Let's go back. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes supply zone. So these 8 stocks are filtered. So this is about the filtered list for all the time frames, stocks near demand and supply zones. I wish this information will be useful to you for your further analysis. So let us all meet again in our next video. Thank you.